Hi, everybody, and welcome to the August 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. July was a mixed month for markets as investors rotated away from tech companies in favor of a more diversified approach. The tech-heavy Nasdaq had a weak month, but ended up down only slightly after a strong last-day rally, while the S&P 500 ended up a bit, and the Dow Jones Industrial average did best of all, up by almost 5%. Bonds were also positive for the month, supported by falling interest rates. The hectic month was largely due to rising investor concerns about technology companies, following the artificial intelligence-fueled rally in the first half of the year. While business fundamentals still look solid for many of these companies, the weakness in July is a sign that investors may be starting to pay attention to valuations, which are still quite high in many cases. But while technology had a weak month, though, other areas of the market did better. Small-cap stocks were up strongly, and more economically sensitive sectors like industrials and financials also did well. This rotation was largely due to expectations for interest rate cuts later this year. While the Fed didn't cut rates at the July meeting, Chair Powell did hint at possible cuts later in the year. We ended the month with markets expecting at least a 25 basis point rate cut in September, and more by the end of the year. The main driver of these cuts is the improving inflation data, and that improvement continued in June. Prices were down slightly for the month, and on an annual basis, price growth slowed to 3%, the lowest level in over a year. While we're still above the Fed's inflation target, this now marks 3 months in a row of improvement, so we're definitely heading in the right direction. While this is good news, though, we do still have risks for both the economy and the markets. The biggest right now is slowing job growth. Not only does this suggest the economy as a whole may be pulling back, it also complicates the Fed's decision process. The Fed is charged with both low inflation and high employment, and if job growth keeps slowing, it may be forced to make a difficult choice. And beyond U.S. inflation and job growth, of course, we also have other risks, both here and around the world. The war in the Middle East is showing signs it may expand, for example, even as the Ukraine war continues. Beyond those, we're also seeing a significant slowdown in China, which raises risks for the global economy. And of course, we also have the approaching elections here in the U.S. There's a lot going on and a lot to worry about. But with all of that, we're still in a relatively familiar place as we head into August. Despite some slowing, the economy is healthy and inflation is down. Despite some turbulence, market fundamentals are solid. And while there are certainly risks, the most likely path forward is for continued growth and market appreciation. And that's not a bad place to be as we head into the end of the summer. That's it for this month's update. Thanks for watching, and join me again next month for the latest news. Until then, be sure to check the Independent Market Observer blog for more timely updates. Stay safe, stay sane, and stay healthy. And enjoy the rest of your summer.